welcome. You're watching the Business News brought to you by Blytheway. I'm Charlie Gibson, the head of mining research at Edison Investment Research. Now, with some companies, the clue is in the name. This is definitely a case in point. In some cases, the clue is in the share price. And I can tell you, you could have bought shares in this company at about 125 in January 2016, and then they're trading over double that. And with the full year results just out, I'm very honoured to be joined by the company's chief executive, Nigel Robinson. Nigel, very good morning to you. Thank you very much indeed for joining us. Full year results, we saw the half year, very solid looking half year. Just describe to us what the full year looks like in broad terms.
Well, our full year results for 2018 have continued the trend, as you say, from the first half year of 2018. We ended up generating $204 million of revenue, which is a 92% increase on 2017. And our generated EBITDA from that number is $125 million, which is a 132% increase from 2017. A large reason for that increase is obviously the acquisition of Sasa, which we completed at the back end of 2017. And this has been the first full year of results that we've announced and reported on, which includes a full year of reporting for the Sasa mine in North Macedonia.
So one of the things that investors, of course, love to hear about, in your case in particular, is the dividend. So I think sixpence halfpenny at the half-year stage. What are we looking like for the full year in terms of a dividend?
Yeah, we're announcing this morning a full-year dividend for 2018 of 8 pence, making 14.5 pence for the whole of 2018, which is approximately a 6% yield. And as you recall, we changed our dividend policy when we acquired the Sasa mine, so we will now pay out to our shareholders between 30% and 50% of what we call the free cash flow, which is effectively the cash flow we generate from our two operations now at Kounrad and Sasa, less the sustaining capital to maintain those operations. And what that equates to at 14.5 pence for the full year in 2018 is 44% of that free cash flow.
I noticed in the half-year results, very little capital expenditure, so pretty much what you generated went straight into the bottom line, and I dare say that's got a lot to do with firstly paying the dividend, secondly paying off debt. Is there any intention, or not intention, but is there any requirement? Are there any major capex requirements in the foreseeable future for either operation?
Well, we estimate the ongoing capital of the two mines combined is between $10 and $12 million. During 2018, we finished off the construction, or more or less finished off, with a little bit to do in 2019, I have to say. But the majority of the tailings dam facility to give us an extra 7 years capacity at Sasa was completed. So we spent $16 million last year at Sasa and Kounrad, and that combined with paying $38.5 million of debt down from the debt we acquired when we took on the Sasa mine, and also now paying back in total last year, it will be a cash outflow of $40 million to shareholders. We believe the combination of those amounts of money going out the business is a good balance, such as we invest for the future as well as look after our debt holders and our shareholders.
I suppose the point I'm coming to is sooner or later, a couple more years, 2-3 more years of this sort of performance, and you know, as debt gets paid down, the cash is going to start burning a hole in your pocket, isn't it? So my question, what are you going to do? What plans are there?
It's a nice position to be in, isn't it, if the cash is burning a hole? But our focus at the moment is very much to pay that debt down over the next 3 to 4 years. During the course of 2018, we did restructure and refinance the debt that we acquired when we took on the Sasa mine. But we still, as I say, managed to repay $38.5 million. And we expect it to be at that level for the next 3 or 4 years until we've zero debt in the business. Now, obviously, the key question that a lot of people will be asking us, I think, on the Investor Roadshow will be, what are the growth opportunities? We don't have that much actual organic growth at either of those mines. There's opportunities to enhance productivity. There's opportunities to improve slightly. But we will be looking now quite eagerly and quite earnestly in terms of looking at other opportunities around the world to grow the camel business.
Just talk to me a little bit about costs. If you look at the cost, just on the face of it, you compare 2018 to 2017, it does look like there's been a bit of a jump in cost. Can you tell us what's behind that?
There's been a slight increase in cost. So we often measure it on what they call a C1 cash cost level, which is effectively the cost of producing the metals that we're involved in, lead, zinc at Sasa and copper at Kounrad, plus the cost of getting those metals to the ultimate customer. That's a C1 cash cost. There's been a minimal increase at both sites of about 4 to 5% on that. So we're still well in the lowest quartiles for both of those operations, which is where we like to operate from. The other aspect of the cost is what you would call a fully inclusive cost. And yes, we have seen on a unit cost basis an increase there from $1.30 up to $1.64, which in round terms seems a lot at 27%. But actually, when you analyse it, a lot of that increase, about 11% of it, is born purely out of the fact that the zinc and lead prices have reduced against the copper equivalent prices, which is what we measure it against. And also there's been a full year's worth of interest at $11.5 million, which is about another 9%. If you then throw in overheads and other costs and some non-cash related costs to do with share options and some legal fees to do with the refinancing, the actual movement on the base cost for the business is very minimal across the whole operations.
I noticed you quoted your costs there in dollars per pound of copper produced, didn't you? So, and at 160 and a bit. I mean, it's worth just mentioning the fact that the copper price is currently trading at a bit over $3 a pound. So
absolutely,
you've still got a sort of an almost 50% margin that you're
very
operating
much so. We've got
with.
good margins on all of our operations. And as you rightly say, Charles, what we experienced in the second half of last year was about an average decline of 20% in all three metals that we produce from the middle of the year right through to the end of the year. But in the first quarter of this year, we've certainly seen an increase in all those metals, and in particular zinc, where inventories are at a long time low, probably a 12-year low in terms of zinc refined metal in the warehouses. So we have seen an upturn since the turn of the year. We did suffer some low prices in the second half of the year, but despite that, our business model, if you like, is always that we operate in the lowest portion, should I say, of the cost curve, which enables us to turn a profit in a cyclical business.
Tell us a little bit about the countries in which you're operating, because they don't, as I say, they're not ones with which investors are necessarily completely familiar.
No.
There's Kazakhstan, isn't there? And then there's North
Macedonia
indeed, now.
Yes,
so yes, tell us a little bit about the operating environment, maybe a little bit about the politics. Just how North Macedonia has become North Macedonia.
Okay. Well, first of all, Kazakhstan. I mean, in fact, Kazakhstan is the easier area for me to talk about because we've operated now there successfully for over 10 years, and it's a place that we find we can do business and we're comfortable with doing business in Kazakhstan. And I think people have got to know us in Kazakhstan as good citizens of the country, paying our taxes and returning a lot of money to the local communities and the state coffers as well, should we say. North Macedonia is new to us. We're learning. We've been there 18 months now, and as you rightly say, it's been through a bit of a political transformation in terms of the naming issue, which has been on the table now, I believe, for 26 years, and has finally been resolved. So it's now a country called North Macedonia.
And the key thing is the Greeks are happy with that.
The Greeks are happy with it. Maybe not all the Greeks, it's fair to say, but certainly the government passed it. The Macedonian parliament have passed it. And I think now they can look ahead to the future, really. And the positive thing from a business perspective is that it indicates that North Macedonia is very much looking towards joining NATO and then EU accession, which is certainly positive for us as a business operating out of North Macedonia.
Excellent. All right. Well, we wish you the very best of luck, Nigel, and come back as always in 6 months' time. Let us know how the interims have gone if you don't come back because you don't have an announcement beforehand, in which case we definitely expect to see you.
Okay, thank you, Charles.
Not at all. Thank you very much indeed. Ladies and gentlemen, that was Nigel Robinson, Chief Executive Officer of Central Asia Metals PLC. As I say, a company you could have bought 3 years ago at a price of £1.25p, and they're now trading more than twice that. As the Americans say, you do the math. I will be back with you as soon as possible with more such mining opportunities. And until then, you have a very capital day.